The markets may be closed, but the business stories are just heating up. I'm Robert Tang. Catch up with us on Business Brief. Here are today's top business stories. Trust ratings diverge at the top. President Marcos slips into negative territory as Vice President Sara Duterte gains ground. The BSP warns the Philippines is heading back into balance of payments deficits in 2025 and 2026. The infrastructure watchdog moves to wrap up Ombudsman referrals even as reform pressure builds. Property prices keep rising, but momentum cools in the third quarter. And ahead, Warren Buffett on the money moves that still matter most. After posting a rare surplus, the Philippines is now headed in the opposite direction. The Bangko Sentral ng Pilipinas expects the country's balance of payments to swing back into deficit in both 2025 and 2026. The BSP projects a $6.2 billion deficit this year, equivalent to about 1.3% of GDP, followed by another $5.9 billion shortfall in 2026. That marks a reversal from a $600 million surplus in 2024. Weaker exports and a wide trade gap in goods continue to weigh on the country's external position. Despite the expected deficits, the BSP says international reserves remain strong, providing a buffer against external risks. Home prices are still rising, but the surge is clearly cooling. New Bangko Sentral ng Pilipinas data show property values continue to climb in the third quarter of 2025, though at a much slower pace. The residential property price index posts a 1.9% year-on-year increase, sharply down from 7.5% in the second quarter. The National Capital Region leads with a 2.3% rise, while areas outside NCR grow by 1.6%. By housing type, house prices rise 1.9%, easing from a steep 13.1% last quarter. Condominium prices rebound to 1.4% after a 0.2% contraction earlier. The BSP says the modest gains reflect balanced demand and supply, creating a more stable environment for both home buyers and investors as regulators closely monitor market conditions. Public trust is shifting dramatically at the top. President Ferdinand Marcos Jr.'s net trust rating slips into negative territory at -3%, while Vice President Sara Duterte climbs to a solid 31%. The Social Weather Station survey shows Marcos scoring highest in balanced Luzon at +18, but posting negative ratings across Mindanao, Visayas, and the National Capital Region. Duterte dominates in Mindanao with a commanding +74. These results come amid ongoing investigations into alleged anomalies in flood control and road projects in Oriental Mindoro and Davao Occidental, highlighting a stark contrast between official positions and public confidence. A commission meant to fight corruption is losing its own members faster than it can finish investigations. The Independent Commission for Infrastructure faces another resignation as Commissioner Rosana Fajardo steps down effective December 31. Fajardo says she has completed all tasks assigned to her and met the objectives of the commission. She adds that a permanent commission with enhanced powers would be far more effective in prosecuting officials linked to the anomalous flood control scandal. Her exit follows former Public Works Secretary Rogelio Babe Singzon's departure from the investigative body earlier this month. Malacanang acknowledges Fajardo's role in the probe and emphasizes that the investigation against corruption continues. Still, with another key member gone, doubts about the ICI's effectiveness are growing. The slow pace of the flood control investigation threatens public trust and investor confidence in the government. With key members gone, ICI now turns its attention to finalizing referrals to the Ombudsman in connection with the flood control probe. Since its creation, the Commission has filed 8 referrals involving nearly 100 individuals, including senators, congressmen, DPWH officials, and contractors. More than 20 billion pesos in assets have been frozen as part of these investigations. ICI Chairperson Andres Reyes Jr. says the body will also push for reforms to prevent future infrastructure irregularities, including greater transparency in the budget process and blacklisting problematic contractors. From police chief to urban manager, General Nicolas Torre III takes the reins of Metro Manila Development Authority, swapping a 4-star uniform for the city's infrastructure and traffic oversight. Torre takes his oath as MMDA General Manager before Executive Secretary Ralph Recto today. He was relieved from his post as Philippine National Police Chief on August 25, later replaced by Police Lieutenant General Jose Melencio Ratates Jr. During his police career, Torre led high-profile arrests, including former President Rodrigo Duterte, who was transferred to the International Criminal Court, and Kingdom of Jesus Christ founder Apollo Kibuloy in Quezon City. Meanwhile, the National Police Commission, or NAPOLCOM, confirms that Torre has resigned from the BNP after being appointed General Manager of the MMDA. NAPOLCOM Vice Chairperson Ralph Calinisan says the move will allow Nartates to assume the 4-star rank. As Torre assumes leadership of the MMDA, he is set to oversee effective traffic management and infrastructure coordination across Metro Manila. We're taking a short break. Stick around. We've got more stories ahead. You're watching Business Brief. Ahead of the new year, the PNP is taking a big step to turn explosive celebrations into safer ones. The PNP plans to set up centralized markets for firecrackers and pyrotechnics. PNP Chief Police Lieutenant General Jose Melencio Nartates Jr. says these designated areas will make it easier to monitor legal sales and prevent illegal distribution of fireworks. Police and local governments will also coordinate fire trucks, emergency responders, and sale periods to ensure safety during the holiday season. Billions meant for roads and bridges appear to have gone nowhere. Multi-billion peso ghost projects are now emerging tied to so-called alleged contractors. Construction Corporation, allegedly linked to Bilyonaryo political brothers Eric and Edric Yap, reportedly received about 16.6 billion pesos in public works funds. Documents from the Anti-Money Laundering Council show large amounts that exceed completed work. The AMLC says there is ample reason to believe DPWH funds were later funneled to the Yap brothers and their associates. It alleges layered transactions were used to obscure the money trail, with funds moving to entities unrelated to the company's operations. These alleged irregularities threaten trust in government projects, fair procurement, and investor confidence in Philippine infrastructure. Toyota isn't just leading the Philippine auto market, it is accelerating away from the competition. The brand now commands nearly half of all local vehicle sales. So what's keeping Toyota in the fast lane? Our mobility correspondent G. Baroga breaks it down in this Business Brief report.
From city streets to provincial highways, Toyota Motor Philippines, or TMP, of the Bilyonaryo T family continues to rule the roads. Industry numbers show Toyota sold over 205,000 vehicles as of November, beating last year's nearly 198,000 units for the same period. That's a 4% jump, outpacing the overall growth of the local auto market. So what's driving that steady climb? TMP First Vice President for Corporate Affairs Jojo Villanueva says one major boost comes from Toyota's growing lineup of electrified vehicles.
TMP sustained its growth by expanding the sales of our electrified vehicles. With the recent introduction of the ATIV, we have expanded also the range, making the electrified our vehicle lineup accessible to more customers.
And it's not just hybrids. Toyota has also rolled out the BZ4X, its very first battery electric vehicle in the Philippines. Before that, going fully electric meant stepping into its luxury brand Lexus, with the RZ and UX models leading the way. Based on TMP data, Toyota and Lexus have already sold nearly 17,000 electrified vehicles, up a strong 45% from last year. This push toward electrification is part of Toyota's Beyond Zero vision, aimed at cleaner and more sustainable mobility for everyone. But it's not all about new tech. Another big reason behind Toyota's momentum is a familiar name making a strong comeback: the Tamarao. At Toyota Marilao in Bulacan, under dealer principal Oben Group, the Tamarao has quickly become a crowd favorite and a sales powerhouse. In fact, this dealership now leads the country in Tamarao sales.
As of November, we have a growth of about 10%, and that's way beyond our projected. But the market here in the province is actually much stronger compared to our dealerships in NCR. It's actually quite lagging behind. But for Toyota Marilao alone, so far we're doing well, and with a big help of the Toyota Tamarao. And actually, the Toyota Tamarao comprises about 35% of our total sales.
He adds that the key to success is the utility vehicle's versatility, which can be a personal ride or a business workhorse. It comes in various conversions, such as food trucks, pet grooming units, service vehicles, and even race cars. And Oben Group's champion team Avengers Racing is one of the teams to watch out for at the 2026 Toyota Gazoo Racing Philippine Cup, featuring the iconic Tamarao. For BNC Mobility, G. Baroga.
Japan is spending more than ever while promising not to lose control. The country unveils its biggest budget on record at $785 billion for fiscal 2026 as Prime Minister Sanae Takaichi pushes aggressive spending without fueling debt fears. The budget totals 122.3 trillion yen, up from 115.2 trillion yen this year. It includes a record defense allocation of more than 9 trillion yen, about $57.9 billion, a 3.8% increase from last year. With government bond yields rising and the yen remaining weak, the Takaichi administration reassures investors it will avoid irresponsible debt issuance or tax cuts. The plan underscores Japan's balancing act, maintaining fiscal stimulus while keeping public debt in check, moves that carry implications for Philippine-Japan trade and investment flows. Legendary investor Warren Buffett is back with time-tested advice for building long-term wealth, lessons that are as relevant today as ever. Buffett emphasizes the basics: avoid losing money, focus on risks that are understandable, and keep costs minimal. He reminds investors to steer clear of credit cards to prevent debt and warns against passivity. His message is clear: stay informed, stay disciplined, and maintain a long-term perspective. Heading into 2026, successful investing comes down to patience, emotional control, and consistently making decisions based on knowledge, not market noise. Video games are about to get a major upgrade from humans to machines. Artificial intelligence is transforming the industry, giving developers tools to build faster and more complex 3D worlds. The sector is projected to generate $190 billion this year. Google DeepMind and Fei-Fei Li's World Labs are leading the charge with world models, AI systems that navigate and recreate physical worlds. Generative AI is now helping create visual game assets, including distinctive landscapes and characters. Epic Games and Disney have even used AI to develop interactive characters in Fortnite. Experts say AI could soon be essential not just for video games but for films as well, positioning the industry to be among the first major beneficiaries of this technology. We're taking another short break. Up next, take a quick look at the markets post-Christmas. That and more when Business Brief returns. Stay with us. Asian shares rise today following Christmas holiday trading. Markets are higher while Hong Kong Hang Seng and Australia's ASX 200 remains closed. On currencies, the US dollar strengthens against the Japanese yen but weakens versus the South Korean won and Thai baht and remains flat against the Hong Kong and Singapore dollars. The Australian dollar is also flat against the greenback. On commodities, gold climbs nearly 1%. Oil prices are mixed. On crypto, Bitcoin rises over 1% and Ethereum gains almost 1%. Philippine stocks climb following the Christmas holiday. The PSCI closes almost 0.4%, higher to 60.65. Majority of the sectoral indices are in the green, while mining and oil rising the most at more than 3%. Advancers outpace decliners 107 to 80, with value turnover at 2.8 billion pesos. Majority of the day's most active stocks are in the green, with Nickel Asia rising the most at nearly 7%. And on currencies, the peso is currently trading at 58.81 against the US dollar, up from the previous close of 58.85. A state investment fund meant to grow public wealth is drawing fire for backing a private port operator. Maharlika Investment Corporation spends nearly 2.9 billion pesos to buy a portion of Kayak Holdings' stake in Asian Terminals Incorporated. The purchase is part of Maharlika's plan to acquire up to 11.2% of ATI, supporting a potential delisting of the company from the stock market. Bagong Alyansang Makabayan criticizes the move, calling it a bailout for private corporations at the expense of taxpayers. At a time when infrastructure trust is under strain, fresh foreign capital is moving in. Aboitiz Equity Venture shells a 40% stake in Aboitiz Infra Capital to Global Infrastructure Partners for nearly 13.7 billion pesos. The deal injects new capital into AIC, while AEV remains controlled with a 60% stake and moves to accelerate projects in airports, water, and telecommunications. Global Infrastructure Partners say the partnership brings global expertise to help scale infrastructure development and support long-term sustainable growth in the Philippines. After years of delay in the casino sector, a major property player is stepping back to refocus. Megaworld Corporation, led by Bilyonaryo Kevin Tan, sells an 11.24% stake in SunTrust Resort Holdings Incorporated. The sale is part of Megaworld's shift back to its core real estate business after raising more than 1 billion pesos from partial divestments. SunTrust, now majority owned by Travelers International Hotel Group Incorporated, continues development of the long-delayed Westside Integrated Resort in Parañaque. A boardroom exit is drawing attention far beyond corporate governance. Businessman Joseph C. resigns as director of Global Ferronickel Holdings Incorporated, citing personal considerations. The company thanks C for his service and says it will issue updates on board matters as required. C's resignation comes amid national security scrutiny and questions raised by the Bureau of Immigration regarding his Filipino citizenship. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again next week for the stories that help you plan your next big, bold business moves. Only here on BNC, the Bilyonaryo News Channel.